Happy Monday, traders, and welcome to a fresh week in markets. Okay, so at the end of last week on Friday, the market still had to navigate a big risk event, and that was Powell speaking at Jackson Hole at the Central Bank Symposium. And obviously, the market was looking for some direction with respect to interest rates and Fed policy. One of the things is that Powell has been stubborn all year on rates and has not cut. But it looks like on Friday he has pivoted, and Powell has basically opened the door for rate cuts now. He did make comments that conditions now seem to warrant rates lower, but they would tread carefully. In any case, look, the market loved it, loved hearing him being dovish and opening the door for rate cuts. So what we saw in the bond market, we saw Powell basically pushing yields lower. So US 2-year yields were trading around about 3.8% before he spoke, and they closed down at 3.7, so down about 10 basis points. Same for US 10-year yields, they were trading around about 4.35 and closed down 10 basis points at 4.25. So getting those yields lower is certainly what has sparked that risk-on trading on Friday. So equities do what equities love to do, and that's just continue to go up. So equities closed up, Nasdaq, S&P about 1.5%, and within stone's throws again from record highs. So not sure what's going to stop this bull market, but it certainly still is very healthy. On Wednesday, there's some NVIDIA earnings after market closes on Wednesday. That's probably going to be the big event for US equities this week. Obviously, it's a $4 trillion company, market cap wise, and post earnings, it does move a few percent. A few percent will move the index on a $4 trillion company. Okay, besides equities, we did see action across other asset classes. Those bond yields lower certainly did get the currency market going, and the market did sell the US dollar across the board. One of the high conviction trades that the market certainly has at the moment is short US dollars, and believing that's going to be the next big trending move. It doesn't take much for the market to put this trade on. Obviously, Powell gave them the green light. And I'd imagine that as data, we get more data before the Fed meeting. If that data continues to warrant that rate cut, they're going to continue to put on short US dollars. One of the biggest movers was dollar yen. That was down about two big figures, about 200 points from 149 down just below 147. Certainly, that's starting to look pretty good on the short side. There is a big technical level below 147, closer to 146, where it looks as if it's a bit of a neckline of a head and shoulders on dollar yen. It breaks that, certainly it opens up much bigger levels on a technical basis. So, dollar shorts, I'd be looking any sort of retracements in dollar yen higher is looking to use that to get short. So if it happens to go anywhere near up towards 148, that's probably the levels you look at. Precious metals, yes, of course, they loved the dovishness. Gold was heavy all week and was down at 33.20, spiked up to 33.70, up $50 post Powell. But we are getting close to some pretty big levels at 3,400 for gold. I think it really needs something special to really push it through those sort of range highs to have a go at that record high again. So not sure if we'll be chasing gold fresh long towards 3,400 or even above it. Silver looks a touch better. It's back at almost $39. The recent 12-year highs are around that 39.50. Potentially that's that $40 targets. If they're super close, might have a run at that. So maybe I prefer to be long silver than gold at these sort of levels. And just this week, not a hell of a lot as far as economic data is concerned, but we do have some inflation data here in Oz on Wednesday that's going to be important. That data looks as if we're going to see year-on-year inflation go from 1.9 back towards 2.3. So going back up, but still a very, in the RBA's target range, but not the sort of number that is going to get the market excited about another rate cut in September next month. So potentially might be bullish for the Aussie. And then PCE inflation data in the US on Friday is going to be the main economic data print this week. And year on year for the core is expected to marginally just go from 2.8 2.9. That's not really going to trouble the market too much. They really need inflation to spike up a lot higher than just 2.9% when you've got Fed funds at 4.25. So I'd imagine maybe it's not going to trouble the market too much, but let's see. Good luck with your trades, and we'll catch back with you shortly.